So you're shopping for an SBA loan. First of all, congratulations. I'm sure whatever you're doing is big and exciting. Now it's time to get that money so that we can make this happen. But let me stop you before you start shopping like you're trying to refinance a Hyundai, because not all SBA lenders are built the same. In fact, no two are alike. The SBA merely provides a 75% guarantee to the bank. It's up to the bank to design their own program, and believe me when I say they vary. So I'm here to break down the 5 things that you actually need to be looking at when shopping for an SBA loan. Hey, I'm Ray Drew, an actual SBA lender, and in this video, I'm going to tell you the exact questions to ask prospective SBA lenders so that you can avoid making the biggest mistakes I've seen too many business owners learn the hard way over the years. Let's start with the obvious one, what everyone knows to ask. What's the rate? But not just the rate. Let's seek to understand all the rates and terms. The rates are all tied to Wall Street Journal Prime. The maximum rate is Prime plus 3, which is 10.5% as we sit here today. And then it goes down from there based on the overall strength of the application and the lender's pricing model. You also have the option of fixed versus variable. The rate structure and the rate itself is a big differentiator for many SBA lenders because some price their loans closer to Prime plus 3, while others go as low as Prime minus 1.5%. That's a 4.5 point swing, much bigger than you'd see in the residential space, for example. Now, why on earth would anyone want Prime plus 3? You may be surprised to find out that some of the largest lenders in the country price their deals towards that end of the spectrum. It's not because of borrower ignorance, it's because they're offering something of value to small business owners. And these are the very items we're going to be covering here today. So please keep watching. We're only getting started. The rest of the terms, prepayment penalty, repayment schedule, closing costs are actually not going to vary much from lender to lender. So I wouldn't focus too much on that, but do pay attention to the down payment and the working capital. Cash is king when it comes to small business. And if you value your liquidity, you may find yourself wanting to pay a higher rate to be able to put less money down and or get more working capital. And I'm gonna give you one more tip here before we move on to the rest of the video, and that is lines of credit. Some SBA lenders will tack on a line of credit, while others don't really wanna mess with them. A line of credit can be an incredible tool for businesses with a cash conversion cycle, and they can be hard to get in your first couple of years. So if an SBA lender is offering one on top of their SBA term loan, then I would view that as a plus. All right, number 2, experience. Ask the lender this: how many deals like mine have you closed in the past 12 months? Because closing a $3 million business acquisition is not the same as financing a food truck. 3 things. Think loan size, think project type, and think geography. I'll explain. First, loan size. You can look up their average loan size. I'll leave a link in the description that you can use to kind of figure that out. But if the average loan is, let's say, under $500,000 and you're coming to them with a $4 million deal, that should send up a red flag. Next, project type. As an industry insider, I know that some banks are better at certain types of projects. If you're financing a business acquisition, ask about business acquisitions. If you're financing a franchise startup, ask about their franchise lending, etc. Finally, geography, and this is another trick that banks like to play. Sure, they'll say they lend nationally or in a certain market, but are they lending in your market the same way they're lending in their backyard? I would avoid banks that have one foot in and one foot out in a market because they're going to look for ways to mitigate undue risk, whereas a lender who is truly location agnostic or has a true presence in that market isn't going to see that location as a risk at all. In fact, they might see it as a benefit. Now, notice I didn't say industry. SBA lenders are used to financing totally random industries. While it could perhaps be of value, it's not a needle mover in my opinion. In fact, sometimes it could be a negative because that banker may have had one bad experience in that industry that tainted their entire outlook on the industry. Now, the reason I'm telling you to ask these questions is because you don't want to be someone's guinea pig. This is way too important for you, and quite frankly, it would be worth paying a slightly higher rate for a lender that has the right type of experience. Okay, number 3, decline rate. I'm going to let you in on a dirty little secret in SBA lending. Some lenders issue a lot of term sheets, and most never close. If a lender is declining more than 10% of their loans after issuing a term sheet, they probably don't have a very tight upfront pre-screen process. But it gets worse. There are lenders out here declining 20, even 30% of their term sheets, and you would never know unless you ask. Simply ask the question, how many declines have you had in the last 12 months? And trust me, they'll remember. Nothing hurts more than a late stage decline. Figure the average BDO issues 2 to 3 term sheets a month. And remember, these declines are happening after you've wasted 1 to 2 months getting pre-approved, getting a term sheet, signing it, providing a good faith deposit, doing the projections, writing the business plan, filling out the forms, and going through underwriting, only to find out the bank doesn't like the deal. Ouch. Number 4, now these are getting interesting. BDO Competence. You would think because the bank is reputable that your BDO is reputable. Unfortunately, it doesn't work like that. Some banks will hire junior people and put them out into the market so that they can go develop business. If they make it, they make it, and if they don't, well, nice knowing you. Now, that's not a bad thing necessarily. Heck, I've done it, but with proper oversight. But even with proper oversight, mistakes can and will be made. I've seen BDOs completely screw up deals, misrepresent facts, overpromise, and ultimately blow up a transaction at very fine lending institutions. How can we avoid this? Get that BDO scorecard. How many SBA loans have you personally closed and over how many years? Because here's the truth. An inexperienced BDO can kill your deal, and a good one can resurrect it from the dead. You're not just choosing a bank, you're choosing a person. And finally, number 5, execution style. Probably need to think of a better name for that one. Some lenders are slow, old school, and bureaucratic. Others are sharp, fast, and communicative. The easiest way to weed out a lender is if they don't show strong execution in that first week, because it only gets harder from there. Now, chances are the BDO will say the right things up front. The real mystery is, what does the team behind them look like? And who are you really going to be dealing with over the next 2 to 3 months? Ask questions like, will I have a dedicated point of contact? Will that be you, or will that be someone else? How fast can you realistically close? I actually prefer to ask, how long did the last 5 or 10 deals actually take to close? So you can get actual data. And whenever possible, ask to speak with someone who's actually done business with them before. The SBA process isn't always smooth, so make sure your lender can handle the terrain. So yeah, shop around, but shop smart. Don't just chase the lowest rate, look at experience, execution, and track record. Because when you're making a once-in-a-lifetime move, the advice I give everyone time and time again is to choose the right deal team, and that means choosing the right SBA lender.
So there you have it. If you found that video helpful and you want more expert advice from an actual SBA lender, then I would invite you to hit that subscribe button, because I've got plenty more where that came from.